creating opportunities for your current database and your future database, because whether or not you like it or not, it's probably going to become a more frequented conversation. And I'll let Bill kind of get into that. It's sort of at a steamroll session now. It's been a slow kind of volcano, the hot lava, and now it's almost ready for full eruption. And when that happens, you don't want to miss the boat. So Bill, thank you for your time. We like to keep it about 20 minutes, so it'll be very high level, how we can help realtors understand what this means and how we can make it relevant to our business. So Bill, tell us a little bit about your background.
What's this boomer doing talking about Bitcoin, right? That's what you're all thinking. I got putting up a Yahoo channel called Bit Boomer. So I am a boomer. I am into Bitcoin and have been for many years. But what is this thing, Bitcoin, right? Everybody's talking about it. Everybody's saying how, it's going to the moon, it's going to zero. There's two camps on this thing. And what really is it? Well, in my opinion, Bitcoin is a technology. Blockchain technology is going to change the way we transact, the way we work internationally, the way we do things with our money. And it's clearly becoming that faster and faster all the time. But what really is it? So, it's a confusing thing. It takes a long time to learn the ins and outs of Bitcoin for sure. But I'm going to share my screen here so you can just see an image. It's easier to kind of look at it instead of trying to visualize what this thing is. But really all it is, I guess I can't share yet. Oh, I just got it. Thank you, Mia. What it really is a way for you to be able to, oops, I got the slide on the wrong screen here. Pardon me while this boomer gets through his technical issues here. The bottom line to what Bitcoin really is it's a network on a network, right? So it is a way for you to be able to, and I'm not able to share my, oh, you are sharing it. Okay, good. I'll put it in the presentation here. So visualize this, right? You can see the screen image here, I believe. Can you see it, you guys? Everything? Yeah?
Yep.
All right, good. So these are a series of blocks, right? So these things they're showing blocks because it's a blockchain. But what this is a worldwide network of computers. And all of these computers are talking to each other at the same time, but there is no server. The server is not present. It's not centralized. It is strictly a network of computers called nodes. And there's about 75,000 of them around the world. So in order to change this server, to hack it, if you will, you have to get at least half of them to agree to a change you're trying to make. And you're going to have to hit 35,000 computers at once to hack it. Bitcoin has been talked about being hacked, but the Bitcoin blockchain has never been hacked. And the reason for that is because it's a secure system. Now, people have stolen keys and gotten to people's tokens. That's different. People have been involved in FTXs and other scams in the world. That's different. But the network itself has never been hacked. The place that hacks take place is on these centralized exchanges connecting to the network. So we've all heard of FTX, right? Let's get the big elephant out of the room. Sam Bankman-Fried stood up this company that would take your Bitcoin and give you yield on it for loaning it to him. And he would pay you some money, some yield for having it, just like making a big CD deposit, you get yield, or making a equity investment in stocks, you might get yield. So the yield that people were getting, their Bitcoin isn't liquid. They want to get money from it. So they gave it to Sam Bankman-Fried. He went out and did stuff with all that Bitcoin, got in a lot of trouble, did some stuff he shouldn't have done. The whole thing collapsed, right? But it wasn't Bitcoin. It was FTX. There have been Apollo, Cyprus. There have been Bitcoin loans in the world around the world for a while now, since 18 or so. People have been able to borrow against Bitcoin. But in every one of these circumstances, the challenge was that they would give the tokens to the lender. So we're going to talk about how we solve that problem. But just know that the Bitcoin network, the blockchain network, which Bitcoin is a network and a cryptocurrency. Sometimes you have different networks in crypto, such as, for example, Ripple is the network and XRP is the token. There's different terminology, but we're not going to get lost in the weeds of all that. Basically, just know that Bitcoin is a standalone token and network that really only does one thing well, and that's record transactions. There's not a lot of commerce happening on it. You can't do programs on it. It's not like replacing the internet. It's really just a technology that is decentralized. Nobody can control it. Nobody can do anything with it. If you want to transact on the network from one person to another, nobody can stop you. There's no intermediary in the middle saying, well, where did those funds come from? Did you make a deposit of $10,000 or more? Where did those funds come from? There's no security, SEC. It's completely unregulated. Excuse me. So what does this mean for us? Bitcoin holders, hodlers, we call them. A great story back in 2010. A gentleman named Laszlo wanted to order some pizzas on the Bitcoin network. This is the first known transaction on the network. And what he did was he posted on a BitChat, it was a BitTalk forum, that he wanted to buy 2 pizzas and he'd pay 10,000 Bitcoin for those 2 pizzas. So this guy in California was an exchange student from London. He was at Cal, and he said, I'll do it. And he put up his credit card to Papa John's in Florida and sent Laszlo his pizza. And so once Laszlo got his pizza, he sent the 10,000 Bitcoin. The first transaction happened. At the time, Bitcoin was about 0.0041, which means that was about 41 bucks worth of Bitcoin that he spent to do this. Now, in the early days, the early adapters were miners. They were getting 7, 8, 10,000 Bitcoin for doing the mining work. We won't get into details of mining. It's not somebody out in the field pulling up tokens. It's actually a computer program that solves a very difficult cryptographic equation, thus the term crypto. So he got 10,000 Bitcoin for sending 2 pizzas. At the time, it was worth 41 bucks. Today, that's $1 billion. Bitcoin is now at 102, so that's $1 billion 02 billion. So 1 billion 02 million Bitcoin.
That
So
definitely.
that would be a pretty cool day, right? But in 2010, 41 cents. 2020, the average Bitcoin was about 9 grand. Right, so somewhere between 41 cents and 9,000. The guy probably sold it, probably at $1. Who knows, right? So he like, holy cow! I just got $100 off of those 2 pizzas. Good for me, right? But little did he know what would happen. So everybody in the Bitcoin community knows this, and they came up with this term that they call HODL, HODL, right? So back in 20, I don't know what it was. I think it was back in 2015 or so, Bitcoin had run up to about 4,000 and had come back down to 2,000, went up again, and then it started coming down below 1,000. Everybody was freaking out, thinking it's going to zero. Is this thing worth anything? What are we going to do? And a guy in the chat room wrote, I'm holding, right? But he spelled holding HODLING. He had a typo, and his text was riddled with typos. They all thought he was drunk, but he says, I'm hodling. So hodling became the term for holders of Bitcoin to say, hodl, don't ever sell it, keep it, right? So what problem does this solve, right? So Bitcoin is a technology. It works on a decentralized platform that nobody can interrupt. It is something that is pretty unique in its vision from Satoshi Nakamoto, this mysterious person that invented it. Nobody knows who it is. But what problem does it really solve? So when you look at the economy today, back in, what was it, 1913, 14, something like that, the Fed was created. Then 33, we had the Great Depression and the run on the banks. And then we had all these other things happening. 1971, Nixon took us off the gold standard. So what happened in 71 was that when Nixon said we're going to remove the currency from the gold standard, he wanted to be able to manipulate that currency and print more of it to solve a cash crisis that was happening in the world. He made a deal with the Saudi Arabians at that time that oil will be traded in dollars. They call it the petrodollar, right? So the petrodollar was created and the world traded oil on dollars all the way up until about 2021 or 2, I believe, when Biden decided to penalize the Russians for invading Ukraine by first taking all of their reserves, $800 billion, and just basically confiscating them and telling Russia they can no longer operate on the SWIFT system, thinking in his mind that'll cripple them. They won't be able to sell their oil. They won't be able to do anything. They're going to be screwed. They won't be able to transact. Well, that's the opposite of what happened. Russia went out and said, screw that. We're going to go ahead and sell. We're going to buy oil directly from the Saudis. And the Saudis said, sure. So they started trading oil in rupees, and the Russians were in control of that whole process. And then the Russian economy has increased severely, and a new thing called BRICS was created. So BRICS is a consortium of nations. It started with Brazil, India, China, and South Africa, and now it's 42 countries and growing that are all putting together their resources and saying, we're going to transact a new way. And they're using blockchain for this. So here we go, right? So what problem does this solve? It is a way to, there's only 21 possible Bitcoin in the world. All right, that's it. It's finite. It can't be increased. There's only 21 million of these things. You can chop it up into big pieces, and I'm going down a long trail here to get to this point, but you cannot just print money. It can't happen on the network. So all of a sudden now, all the world is looking at this saying, wow, nobody can manipulate this currency. It's going to be its own market. It's going to go up and down as people see value in it, but it's becoming a store of value as well, meaning that nation states like El Salvador and even the United States now, Trump has been talking about getting a Bitcoin reserve for our country. That means that some of these coins are going to be stuck in a hole and not circulated, which means more and more scarcity, more and more appreciation. So having said all that, the currency that we have, the dollar, is falling out of favor. People don't want to have whole dollars because all they can do is go down in value. We're seeing it now. We're talking about inflation being, PCE, or that's tomorrow, but CPI. That measure of inflation is just looking at a basket of goods. That is not what real inflation is. When the dollar gets, liquidated by 3 trillion more than we take in every year, our debt service on our treasuries today is $1 billion a year, $1 trillion a year. So that $1 trillion represents, we take in 4.9 trillion, we spend 7.1 trillion, 3 trillion a year we print every single year. We're up to $36 trillion now, right? So we're in trouble. The dollar's in trouble. The world sees this. This has become the store of value. So what does it mean for our clients, right? So as realtors and lenders, we're hearing our clients talk about Bitcoin. How do I use my Bitcoin to get a house? I personally would not sell my Bitcoin. I have some of it. I'm not selling it. I'm holding it. I believe that the Bitcoin will be $250 by the end of 2025, $250,000, right? Double and a half what it is today. The reason I believe that is what's happening right now. We've already had the repeal of SAB 121 in Congress. That happened in Trump's third day. He repealed this SAB 121, which is a bookkeeping memorandum from the SEC that says that you cannot, if you're a bank, you cannot custody Bitcoin unless you call it a liability on your balance sheet. In other words, it's not an asset for them. No bank wanted to touch it. That just got repealed. JP Morgan Chase just announced they're going to bring on some Bitcoin. All the banks will follow. They're going to custody Bitcoin in their treasury so that they can transact with their consumers with it. They'll offer CDs for Bitcoin. They'll offer all these different tools that are now becoming available. So if you're a holder of Bitcoin, you want to buy a house, you don't have a lot of liquidity, you're 25 years old, 30 years old, you've been in Bitcoin for 15 years, you're 40 now, you're forming a house, right? The boomers are aging out, and now the Gen Zers and the millennials are in their family formation ages, which is the highest peak, the millennials in the next 10 years. They're going to be 2.7 million per year for the next 10 years growing, right? So there's a lot of these people that have all this asset, no liquidity, and they want to buy a house. How do they do it? Well, my recommendation is they borrow against it, and that's what we do. We have stood up a product with the best company to do this with, and I'll talk why they're the best in a minute, because the FTXs of the world and the Cypresses and the Apollos that were doing Bitcoin loans were scam, pretty much a scam. Basically, they were taking tokens and doing things they shouldn't with your custody deposit. Now, think of the banking system. You put 100,000 in the bank, you only have 100,000 guaranteed by the separate entity, the FDIC. To the bank, you are a creditor. You loaned them that money. It's not your deposit. It's not your money. When you deposit that money in your banking agreement, all those things you signed on that little pad says that you do not own it anymore. We do, and that you're a creditor. Well, if the bank goes under, there's a run on the bank. Creditors are the last to get paid. So the FDIC is your only recourse. Well, what happens if we have a major one of those in our country and the FDIC doesn't have the money? You're wiped out, right? So this prevents that. But the Cypresses of the world, the Apollos, we're doing the same thing. They were taking the Bitcoin, rehypothecating it is how it's known, and then they were doing things with it that they shouldn't have, and people lost money from it. So today, we have a product that will allow us to borrow against that Bitcoin up to 75% of the value of that token. And that will allow you to get, let's say you have one Bitcoin today, that's $75,000 you can get. And that will be on an interest rate that you'll pay interest on. But if you're of the belief, which the entire Bitcoin world is, between 100 and 200% this year, because of all this activity that's going to be happening with institutions and the value going up so fast, why would you want to sell it? Why would you want to sell it, pay a 20% capital gain tax, or worse, if it's a short-term gain, it's ordinary income and it can raise your whole tax basis up to 20, 30, 40%. Who knows where, if you're in California, it could be upwards of 40%. So having said all of that, nobody wants to sell it. They want to get a house. They want to get they want to get cars. They want to get boats. They want to get things in the real world that they can't get with just Bitcoin. You could find a seller of a home on the Bitcoin network, but that's very rare, right? Someone says, hey, I'll take 10 Bitcoin for my house, $1 million house, right? And you might find one of those people, you send them the 10 Bitcoin and hope you get the house deed, right? So those transactions are not real solid at this point when they're peer-to-peer. It creates a lot of trust involved in that. You have to trust the person you're transacting with. If it's a friend, that'll work fine. No escrow company, no agents, just boom, 10 Bitcoin per house, right? You just transfer. They put the house in one wallet, you put the 10 Bitcoin in the other, and they switch. That's how that works. So very rare, hard to find. They would rather borrow against it. But these unscrupulous companies that are out there that they can borrow against are charging, exorbitant rates, which are not unusual because this is an unknown entity. But the real risk is the Bitcoin itself. There's a saying in the Bitcoin world: not your keys, not your crypto. When you own a Bitcoin, you get a private key to that coin. It doesn't have to be a full coin. These things are chopped up into 1 million pieces. It's called Satoshis. You can buy $100 worth of Bitcoin, right? You'll just have a 0.00001% of a Bitcoin, right? So that's how that works. So you don't have the key to that crypto. You don't control that key. You don't own it. So what we've done is stood up a lending facility that will solve that rehypothecation problem by letting you maintain the key to your crypto and borrow against it. So that's the real thing here. How does it work for a loan? We can do several things. One, they could put up enough crypto to get cash, pay cash for the house. Great deal for you, great deal for us. We can help you facilitate that transaction. They could get their 10 Bitcoin put into escrow, get $750,000, for example, and go buy a $750,000 house with cash, right? So that's one way they can do it. Another way is they can do a hybrid of both. They can get a mortgage loan in place and use the Bitcoin for their collateral. We have products for that. So they could put up 1 Bitcoin and get $100,000 for the down payment, buy a $500,000 house for $400,000 loan, $100,000 in the Bitcoin loan. So that's another way they can do it. A third way, and this is interesting because I'm talking to my cash buyers, someone that comes to me with saying, hey, I think I'm just going to pay cash for the house. Tell me why I shouldn't. I show them if they were to put 30% down on the house, rather than 100% down on the house. So $1 million investment property, fourplex in Reno, for example. I'm in Nevada. So they get the fourplex for $1 million. They put up $300,000, 30% collateral. We put a loan in place for 70%, $700,000. I show them, hey, get the asset, buy the house. We'll get you a DSCR loan. There's no qualifying on this. I'll talk about the qualifications for the Bitcoin loan. And then they take that $700,000 we just freed up and buy Bitcoin. Right now, you have $1.7 million in assets growing, and your portfolio is growing much faster because you have this unbelievable asset that's going to double this year. And by the end of the year, you could 3 times your investment without even doing anything different than spending $1 million on one property. So anyway, there's a lot of strategies there. I'm not going to go into a lot of those. I'm sure there's a lot of questions here. I'm going to pause for questions and kind of go through. But let me just tell you this: on the Bitcoin loans, there is no underwrite. There is no there is a credit report, a soft pull done that won't show up on their credit, just to see if they have a bankruptcy. Because if they have a bankruptcy, those tokens may be encumbered by the bankruptcy court. So we're not going to loan against anybody that's in an active bankruptcy. Other than that, there's no qualifications. You put your Bitcoin up, you get the loan, matter of minutes. It takes very little time. It can be done late stages of the transaction. They have to get a wallet in this new system that will do this part where you get your keys. Once they have their wallet, they can put the transaction together in a matter of minutes. So it's a phenomenal tool. Your clients are talking about it. You don't have to be the expert. Just get with your NEXA LO, talk to them about, hey, I got a client talking about Bitcoin. I don't know what to talk to them about. They can send you the referral link and they'll get through into our system. We'll start answering their questions and going through the process, helping them fully understand it and seeing if we can help make a transaction happen. But that's how it works.
Yeah, it's definitely a conversation starter, right? Because I think it's always the ones that, we just talked about this today in a huddle, is being the early adopter. So now Bitcoin has already established itself. So it's just you adopting the idea that it's going to become more of a conversation. It's going to be something that's going to be brought up. It could be inquired about. And even for your own personal knowledge to know, maybe it's a vehicle that you should consider for yourself. If you're a real estate agent looking to leverage, some of your income towards retirement, right? Just so many facets, but we want to focus on obviously the real estate transactions that could come from, like you said, leveraging an asset that people don't know we can liquidate and put towards a future transaction. So it's definitely just something to network with your database, your financial advisors. There are probably people that don't know that this type of thing exists and is as easily accessed as we have it.
And you of all people should know that Bitcoin is turning the world upside down, Laura.
Absolutely.
Your image is upside down. You're muted too.
I don't know how to fix it. That is so strange.
That's all right. How about some questions? Anybody have questions about what this is,
sir.
how it works?
Yes, I have a question, Bill.
Yeah, Christian.
How do you start the loan? Just like Accent, or just take a 1003, and where do I come back to? Like, who is the platform that I bring it to?
Well, for Nexans, we have trainings every Monday and Friday, so we'll go through all that. So
yeah, the questions are realtors only on this training. We're not fielding any loan questions. This is only strictly towards our realtors. So if our realtor partners have questions, please feel free to ask.
Thank you.
Wow, that must be pretty good
Hey, Bill.
Edward, how are you?
Bill?
Yeah.
Good. I just want to follow up on my question I put in the notes there. Can you hear me?
I can, yeah, but I didn't check the chat. I apologize.
It's okay. It's basically, what are the time frames for these mortgage for paybacks, and then if Bitcoin price drops because it's such a volatile asset, does that does those get called back or something?
Yeah, I think you're going to see the volatility really smoothing out over the coming years and certainly the coming months. What we saw back in 2022 in everybody's mind with the big volatility was this FTX Cyprus debacle where everything crashed. Everybody thought, holy cow, this whole thing's a scam, right? So we did see about a 60% decline in that year. But if you look at any 4-year period in history, for the long run of Bitcoin, it's gone up over 60% per year for the entirety since 2010. So, from 41 cents to $1 billion, $41 to $1 billion is quite a run. So to answer your question, this acts exactly like a margin account. So basically, if you have a stock account with Schwab and you have Apple stock and you want to borrow against it, you can borrow. They usually do up to 50%. This is better collateral. So we go to 75%. So you can get 75% of your Bitcoin. You don't have to go that high. If you go lower, the rate's lower. But you have a 12-month term on the loan to pay it back, and it renews for 12 months. You can either pay interest-only payments or let it roll for the entirety of the term, as long as the LTV remains the same. Now, if that Bitcoin starts dropping and your loan to value drops to 80%, you'll get a margin call warning, basically saying, look, Bitcoin is falling, shore up your account by either paying down your loan or adding more Bitcoin, and we'll be okay if you do that. Otherwise, at 85%, you'll get a second warning if it continues to drop. And then at a 90% level, if it hits 90, it will liquidate your tokens and you'll get the change, whatever that is. So they'll take a 2% fee for doing that. They'll sell the Bitcoin. Nobody wants that to happen. I never recommend anybody put their entire stack of Bitcoin in the transaction and risk losing it when they could keep some on the side and just throw another, half a token or quarter token in there so that they can shore up their LTV and keep it from going into a margin call. It's better collateral because the house, think about a house, you got a 30% LTV, you put 70% in, loan, 30% down. It might take you a year to liquidate that house. By the time you take it back through the foreclosure process, the bankruptcy, the borrower files, then, finally getting the home back. Now it's a mess. You got to clean it up, throw money at it, and the market might be falling and you have a collateral that's, worth much less than what you lent, and it's a huge disaster. Bitcoin, that can't happen. It's 24/7, 365. There are no holidays. There's nobody to approve a deal. Once the transaction works, then it's over. It's a done deal for the transaction. It executes instantly. Within 2 ticks, you're out of the Bitcoin. The liquidity is huge for Bitcoin. So the whole way down, it's being bought up.
Is the interest rate competitive?
Well, it depends on what you mean by competitive, right? In the Bitcoin world, 12 to 15% is real, and that's where we are. That will be getting lower and lower as we go along. But someone who thinks that their Bitcoin today, their 10 tokens is worth $1 million, but at the end of 2025, it might be 2 million or 2.5 million. They don't care about 15% interest, right? That 15% is $150,000 when their Bitcoin went up $1 million, right? So it's really a non-issue for most people.
Thank you.
We have a question from Linda. Is the loan paid from Bitcoin or real world money? It's funny, the association, right? What would you call real world money? Because essentially we just have paper, right?
Yeah, so it could be either, right? So here's how it would work. If Bitcoin is going up, conversely to our call, we're talking about margin call, but if Bitcoin's going up, you can pull those tokens off the table, right? As long as your loan to value stays the same, you can pull some of your Bitcoin off. So let's say, for example, Bitcoin does double. You could take half your Bitcoin. You just got a 50% discount on that house. Now your 5 Bitcoin bought $1 million house, whereas a year ago it was 10 Bitcoin to buy it. Back in 2010, Bitcoin was about, I don't even know. So it was $41, right, for those 10,000 coins in 2010. In 2020, Bitcoin was at about $9,000. So if you look at the Bitcoin average, so if you took, let's say, $300,000 average house at 9,800 was the average Bitcoin in 2010. So that would have taken 30 Bitcoin to buy a house in 2010. In 2020, that Bitcoin would have been probably 3 times that. It would have been probably about $20,000. So it would have been about 15 Bitcoin. Today, it's about 4. Right. So if you look at the price of a house to Bitcoin, these numbers are halving almost every 5 years. So it's a phenomenal tool to use, and most people don't want to sell it to do it. So you can sell your Bitcoin, use that money, or you could borrow against that Bitcoin too to make your loan payments by selling off a part of it. So let's say it went up 5%. Right. So you could then sell half of your tokens and bring in another half cash. If you don't have cash, you could go ahead and liquidate those tokens to pay back your loan. You don't have to make those payments if you don't want to, but you can. So a lot of flexibility with how it gets paid back.
How quickly can you get a loan this way?
Within a day. So you have to get a wallet with the company, SEC insured, FinCEN registered. It is the only cryptocurrency trading platform that is SEC regulated.
Okay, and that's an escrow account, you say?
It's not really an escrow. So what happens is basically what you do is you get a wallet, you move your Bitcoin from wherever it is. Let's say it's in Coinbase, for example. Coinbase is a centralized platform. You don't own your tokens when you're trading in Coinbase. You have to pull them out. So you can either pull them out and send it to the Figure wallet. It's Figure Technologies. if you wanted to just take a new wallet and just say transfer from Coinbase to my new wallet, that's very easily done in the Bitcoin world. Wallet transfer. So once you transfer that Bitcoin over to your wallet, you can pledge it. What Figure does is they take that token and they custody it. The only digital bank in the United States called Anchorage Digital. So Anchorage Digital NA is a chartered bank, digital currency bank, the only one chartered in the US, and they custody that Bitcoin. There's 3 keys. Anchorage has one, Figure has one, you have one. So those keys cannot do that. Token cannot move with consensus of all 3 parties. So the borrower, the lender, and the bank have to all agree to it. Now, in the case of a margin call, there's a contract in place called a smart contract that executes the trade automatically when Bitcoin hits a certain price by monitoring the price 24/7, 365. You're muted.
We have a question. What's the minimum credit score, Bill?
Oh, Christian just hadn't finished yet. He's muted.
Since Bitcoin can move quickly, and it can experience up to about a 70% drop during some cycles, how quickly will you be liquidated?
It's instant, right? So the monitoring of Bitcoin is instant. When it hits the bogey, it executes.
Well, say the other day it dropped 10K, right?
Yeah, but that wasn't enough to trigger a margin call on a 75% loan.
Oh, it's when it hits 85 and 90%, you say?
Yeah. So if you borrowed 75 and you lose 10% of the price, that wasn't enough to trigger a 90% LTV.
Okay.
Yep. So we do see those pullbacks, but they're moderating more and more. You watch the charts; they're really streaming out. It's getting much less because there's so many buyers at the standby now that suck it up. When it drops fast is when everybody's selling. And right now, you got an institutional investor like Michael Saylor at MicroStrategies buying billions of dollars every week.
Oh, yeah.
Right. So
I'm a big fan. I think Bitcoin is the only solid currency there is. I've been saying the same thing for 8 years.
Me too.
I think, fiat currency is essentially worthless. I've actually been looking for years on I've been looking to actually stake mine if there's some sort of way for me to earn.
Yeah, there's liquidity pools and staking, but just hold it. It's all good. You're making a lot of money. Don't put it at risk.
Yeah.
Right.
You're right.
Because then you're giving it to somebody else. So let's get on to other questions. Laura, for no credit scores at all. There are no credit scores at all on these. Now, if you're going to do a hybrid where you're doing some down payment with Bitcoin and some down payment with a loan, the loan transaction will require a traditional underwrite, or DSCR where there's no income really required, just credit scores would be required. However, for the Bitcoin loan itself, there are no credit scores. Just make sure you're not in active bankruptcy, you're approved. And this is awesome. Worldwide, by the way. It doesn't have to be in the US. It's not a product that requires licensing. It is worldwide. This is a separate thing until there's more regulation put in place.
Yeah, like you said before, peer-to-peer. So that's awesome. And then will buyers be required to hold a certain amount of Bitcoin beyond what they are borrowing to avoid foreclosure due to volatility of the market?
Well, if you're doing just a straight Bitcoin loan, the only collateral is the Bitcoin. So there's no house involved in that. If you're doing a hybrid loan where you put up some Bitcoin and some loan, those loans are they're coming to market now. More traditionally, what we recommend is to take a loan against the Bitcoin separate from the house, use the down payment. Now the loan for the house is the collateral for the house, and the loan to the Bitcoin is the collateral to the Bitcoin. So you're not at risk of losing the house over the Bitcoin being liquidated.
Very good point. All right. Well, that looks like it wraps it up. We try to keep this right around 30 minutes. It's a lot of information. We will be sending out resources to the realtors that have registered. And this is going to help you market and essentially take some of these nuggets and maybe create these conversations. Again, it is a layered thing. So definitely get with your NEXA loan officer that brought you to this call. They can give you marketing strategies and materials and maybe some flyers to help you go touch up your database to see if there's any opportunities there. And we really enjoyed having you guys. And again, we will be here next week, same time. We're going to do some VA deep dive, and we also have a special guest diving into VA loans and how to maximize that if you have that in your sphere and you're looking to help VA borrowers. So do not miss next week. So it's going to be phenomenal. All right.
So I'll just close with this, Laura. Get with your NEXA LO that brought you to the call to discuss this further. You can join our calls. Our trainings on Mondays and Fridays are open to everybody, so you can join those calls. But the bottom line is this: if you're talking to your clients, great reach out point. Talk to them about, hey, we've talked about getting other investment properties for you. You mentioned you had some Bitcoin. There's some new products coming out. Just put this out there to your sphere of influence, your financial planners, your investors. All of your real estate investors should be getting involved in Bitcoin, and that's something that they're looking at likely. So just put the word out and make sure your sphere of influence knows about it. It's a great tool. Good luck.
Yes, awesome. Thank you, Bill. Thank you, everybody. We will see you next week.